Hey everyone, welcome back to Corporate Decoder. Today we're diving into the financial filing of Angel Studios, and let me tell you, this one's got a twist. It's a story of faith-based entertainment, a community-driven approach, and a surprising embrace of Bitcoin. Yes, you heard that right. A studio aiming for heavenly stories is also dabbling in digital currency. Let's see what secrets this annual report holds. First, a quick overview. Angel Studios isn't your typical Hollywood player. They're all about using technology to let audiences decide what movies and shows get made. They have this thing called the Angel Guild, where members vote on projects, support releases, and even help fund future productions. It's a whole new take on how entertainment gets made and distributed. The company describes their mission as empowering the Angel Guild to champion stories that amplify light for mainstream audiences. They do that using a three-step process. The guild chooses, supports, and funds movies and shows. They make money through guild memberships from theaters when people buy tickets, content licensing, and even merchandise. And get this, all guild members make a written pledge. It says, "When I vote, I pledge to help choose excellent entertainment that is true, honest, noble, just, authentic, lovely, or admirable." That's a pretty strong commitment to values-based entertainment. Now for the curveball, their Bitcoin treasury strategy. As of the end of 2024, they held about 304 Bitcoins. The company views Bitcoin as a long-term strategy to help their mission-driven approach. They might even use their Bitcoin holdings as collateral for loans or other financial moves. There's also a proposed merger in the works with Southport Acquisition Corporation, a special purpose acquisition company, or SPAC. If it goes through, Angel Studios will become a publicly traded company. Think of it as a shortcut to the stock market. However, there have been some amendments to the merger agreement with changes related to expense caps. This kind of back and forth is fairly typical in these kinds of deals. To raise more funds, Angel Studios sold Class C common stock at $30.24 a share, bringing in about $20 million. They laid out the hows and whys of setting that price, listing the many conditions they considered for it. Interestingly, company executives and directors also bought some shares during this offering. Of course, like any company, Angel Studios faces its share of risks. They say they have a history of net losses and can't guarantee profitability. That's a pretty blunt admission. Also, a big chunk of their past revenue came from The Chosen, but that agreement ended, which could hurt their future earnings. They also mentioned the risk of violating a settlement agreement with Disney and other studios, which goes back to a legal battle over copyright issues. 4 violations of that agreement could lead to some big problems. Then there are the risks tied to their Bitcoin strategy. Bitcoin is volatile, and its ups and downs could mess with their financial results and stock price. They admit their Bitcoin strategy is experimental and hasn't been tested in various market conditions. Now let's get to the financials. Here is the consolidated statement of operations. Let's talk numbers. Revenue took a nosedive from 2,222 tolls. The Chosen agreement ended, which cut their revenues significantly, and they attributed to the drop to a decrease in revenue from theatrical releases. Also, the Chosen agreement ended, which cut their revenues significantly. The operating income went from an $8.1 million profit to a whooping operating loss of $86.5 million. The net income, which shows the real profit of the business, went from a $9 million income to a $90 million loss. It is worth nothing that one of the few revenue sources that actually increased was Angel Guild revenue, skyrocketing from $290 million to over $35 million. Clearly, the Angel Guild is becoming a big driver of their income. Finally, if we look at the balance sheets, we see that cash and cash equivalents went from $25 and $20 in a single year. They admit that their ability to generate money from content is heavily reliant on factors outside of their control, which can impact how the market receives them. This is honest and makes a lot of sense given that the company has a niche following. Theatrical release revenue decreased by $77 million, mainly because of the absence of a blockbuster film similar to Sound of Freedom, released in 2023. Revenue from content licensing fell by $22 and deals pay it forward. Revenue also took a big hit, falling by $26.2 million as they focused away from it and focused on the Angel Guild. They also mentioned in the risk factors that the release of their SVOD releases streaming, which are difficult to predict. They also mentioned the need to maintain a positive public impression to help retain customer While we are at the risk factors, they also recognize and admit that their success lies on the popularity of a show, which is heavily reliant on different conditions such as budget, the quality of the film, and the vibe of the actor with the audience. The company is very forward that they will incur in operating losses and using cash in their operating activities during 2025 and into 2026, with no assurances that it will work as a going concern if everything goes wrong. Checking out who owns what, Neil and Jeffrey Harmon both have massive voting power due to Class F shares. Data Fund 1 and Kickstart Seed Fund 2 are also major players, but Paul Alstrom has individual large ownership of Class A common stock. One last thing to note, this company is not a shell company and all the filings required are up to date. So, what's my take on Angel Studios? Well, the financial picture isn't exactly angelic. Revenue is down, losses are up, and their cash reserves are dwindling. It is important to remember that much of their recent success are attributed to the Sound of Freedom movie. Their Bitcoin experiment adds another layer of risk to this mix. It is very high risk, high reward. On the other hand, the Angel Guild is a real strength. If they can keep growing that loyal community, it could give them a unique advantage in the crowded entertainment market. They need more of that going forward. What I like from them the most is their honesty. They openly acknowledge the risks and challenges they face, which at least indicates they are well aware of their position and ready to fight. They do have some interesting movies coming out in 2025, however, we cannot ensure that they will have financial success. Overall, Angel Studios is a gamble, but with its values-based mission and new approach of making movies, it makes it an interesting movies coming out in 2025. However, we cannot ensure that they will have financial success. Overall, Angel Studios is a gamble, but with its values-based mission and new approach of making movies, it makes it an interesting moves coming out in 2025. However, we cannot ensure that they will have financial success. Overall, Angel Studios is a gamble, but with its values-based mission and new approach of making movies, it makes it an interesting one. Thanks for watching. If you found this breakdown insightful, give us a thumbs up, share your thoughts in the comments, and subscribe for more deep dives into the corporate world.